Good morning. You're watching Market Cafe with me, Shreyansi Singh and Snehi Shah. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe. So let's get started then. Snehi, what does the international handover look like to you?
Well, Shreyansi, over the last few days, it was looking pretty solid, which means we were bound to see some slowdown, and that's what we've seen yesterday. Good morning, viewers. Let me take you through what Wall Street and the European markets have done overnight while we were asleep. Now, the US stock futures ticked lower on Monday night after the Nasdaq Composite retreated from its record high, and in after-hours action, the shares of GitLab tumbled more than 20% after the software company posted a weak forecast during the full year. During Monday's main trading session, the S&P 500 dropped almost 0.1%, Nasdaq slipped 0.4%, and this came on the back of the two indices record closing high on Friday. So like I mentioned, we've seen a rally for both of these indices, which means a little correction was due. So this move is nothing to worry about. The Dow also slipped nearly 98 points, 0.2% down over there. Now chip makers Nvidia and Supermicro Computer continued their run, gaining more than 3% and 18% respectively. Meanwhile, other mega cap tech names struggled and pulled the market lower. Apple was the stock in focus yesterday, lost 2.5% after the European Commission fined the company nearly $2 billion. Tesla, also in focus, fell more than 7% following new price discounts and led the broad markets index losses. Now, on the earnings front, investors will be looking towards reports from retailer Target on Tuesday morning, followed by Nordstorm and Box after the bell. Now, more economic data also can be expected from Wall Street, including the S&P Global US Service Purchasing Managers Index, that services PMI, and durable goods orders, and the ISM Service Index, all of them scheduled to be released Tuesday morning US time, so we should be expecting these numbers later in the day today. So, well, largely this is the handover coming in from the US markets. Let's take a look at what Europe has been up to, and well, Europe also has not been much to much good because you have the S&P Global Services PMI and PPI data expected from Eurozone. So on the back of these, and also it's important to remember that the ECB rate decision data is expected on the 7th of March. So leading up to that, you could see some reaction from the markets. DAX is down 0.1%, FTSE closed lower 0.5%, CAC 40 only index among the Eurozone to close in the green, up 0.3%, and Stock 600 absolutely flat but with a slight negative bias. So, well, Shreyansi, this is what the handover is looking like globally. Slight downtick, but not much to worry about. But with that, also tell us what's happening with the world of oil.
Absolutely, and it's very interesting what we're seeing play out with oil prices. Oil prices did fall after oil cartel OPEC Plus agreed to extend voluntary output reductions until the second quarter in an effort to support the short-term stability of crude markets, of course. Now, global benchmark Brent fell about 0.9%, settled around that $82 a barrel mark. And when you look at WTI as well, that lost 1.5% and settled around that $78 a barrel mark. Now, OPEC Plus announced on Sunday that the 2.2 million barrels per day of voluntary output cuts that were planned for the first quarter of this year will continue into the next quarter. OPEC Plus kingpin and de facto leader Saudi Arabia said that it will prolong its voluntary cut of 1 million barrels per day until the end of the second quarter. And this is, of course, according to agencies. So that's the word coming in from Saudi Arabia. But when you look at what Russia is doing as well, Russia is another OPEC Plus heavyweight, and they will also be slashing production and export supplies by a combined 471,000 barrels per day until the end of June. Moscow had volunteered to reduce its supplies by 500,000 barrels per day, mind you, in the first quarter itself. Other key producers, the likes of Iraq and UAE, will also extend their voluntary production cuts of 220,000 barrels per day and 163,000 barrels per day, respectively, until the end of the second quarter. Now, oil prices have been languishing in a narrow $75 to $85 per barrel range since the start of the year. So let's see if we see a trend emerge from this movement. But that's largely the handover coming in from crude as well.
Well, lots of factors at play over here. So let's see how this pans out going ahead. With that, let's also take a look at all the important events you need to be watching out for today. And you have the S&P Global Services PMI coming out of the US, UK, as well as Eurozone. From UK, you also have retail sales. And from Eurozone, like I mentioned earlier, you also have the Producer Price Index, which is the PPI figure. Shifting focus to China, you have the Cakes and Services PMI data also coming out. So, well, lots of macroeconomic indicators to watch out for in trade today. So, you do that. And shifting focus back home, and let's talk about some corporate action. Capri Global Global. That stock will be in focus because it is going to undergo stock split in the ratio of 1:1, and the Government of India interest payment is also going to be carried out today. Let's talk about primary markets. What's happening there? You have the JG Chemicals IPO that is going to be opening today, so watch out for that as well. And when it comes to other events, PM Modi is going to dedicate projects worth 19,600 crores in Odisha, and you also have the Super Tuesday happening in US, where you have a whole bunch of states that will be holding the Republican as well as Democratic rallies. So, well, lots to watch out for in today's trading session, so keep your eye out on all these.
Absolutely, and let's also kickstart our coverage with global macros then. According to the government work report released, China has set an economic growth target for 2024 of around 5%. The work report emphasized the need to ensure both high-quality development and greater security, preventing risks and maintaining social stability among other tasks. Now, the country is aiming for an urban employment rate of 5.5%, creation of as many as 12 million jobs. Alongside, China also expects CPI increase of 3%. The set target similar to that of 2023. Reports also suggest that the country is set to increase its defense spending by 7.2% in 2024.
Well, and in the latest commentary coming in from the Fed Reserve, Atlanta Fed President Raphael Bostic, he has said that more macro progress is needed to start cutting rates, flagging that expectations of a sooner rate cut to fuel economic activity, undoing the central bank's recent progress on curbing inflation. The Atlanta Fed chief, who still expects the central bank to cut rates twice this year, also flagged the threat of pent-up exuberance as a new upside risk.
And onto the world of crypto, that's where all the action is at. It's a stellar start to the week for the crypto assets. World's largest cryptocurrency, Bitcoin, topped $68,000, the highest level since November of 2021, edging even closer to its all-time high after the rally took a breather over the weekend. The rally sparked an upmove in fellow cryptos, the likes of Ether, that was up 4%. Both coins are, however, coming off their best week in nearly a year. Bitcoin gained about 21% and Ether 16%, pausing their run over the weekend.
Well, another stock in focus is Apple, and meanwhile Apple has unveiled the new 13 and the 15-inch Macbook Air powered by the M3 chip that allows users to add up to 2 external displays, an improvement from a single screen supported by the earlier chips. It is called the new Macbook Air the world's best consumer laptop for artificial intelligence. Well, that was that for positive news flow. There are some worries as well because the European Union has slapped a whopping $2 billion fine on the company following a complaint by music streaming service Spotify. The US tech giant immediately vowed to appeal on the penalty, and it was the first ever antitrust fine slapped on the company coming from Brussels.
And Tesla shares took a hit, slumping almost 7% after the company's China sales witnessed a slowdown during the Lunar New Year holidays. The fall in sales dimmed outlook for global deliveries amid ongoing demand woes and rising competition as well. Sales were down 19% on a year-on-year basis, the lowest volume since December 2022. For the first time in more than 9 months, Elon Musk is no longer the world's richest person. Musk lost his position atop to Amazon's Jeff Bezos. Musk now has a net worth of $197.7 billion versus Bezos' fortune that amounts to $200.3 billion.
Well, and a moment of pride for France as the country becomes the first to explicitly include the right to abortion in its constitution. Parliamentarians voted to revise the country's 1958 constitution to enshrine women's guaranteed freedom to abort. The overwhelming vote saw a standing ovation in the parliament in Versailles when the result was announced. President Emmanuel Macron described the move as French pride that had sent a universal message.
And the United States Supreme Court has rejected an effort by Colorado to remove Donald Trump's name from the state's Republican primary ballot, delivering the former president a major victory as he seeks his party's nomination. The ruling ends efforts in Colorado, Illinois, Maine, and elsewhere to kick Trump off the ballot because of his attempts to undo his loss in the 2020 election to Biden.
Alright, that's a quick wrap on everything that was happening globally while we were fast asleep and yesterday. But viewers, with that, it's time for a short breather on this edition of Market Cafe. When we return, we'll flag off how the Asian markets have opened up this morning, so stay tuned.
Welcome back. Thank you so much for staying tuned in. Let's take a look at what the Asian markets are doing right now. Now, Asia Pacific markets fell as China two sessions meeting got underway with investors watching out for the details of its economic plans after the country projected a GDP growth target of around 5% for 2024. Right now, Hang Seng is down about 1%. Shanghai is not doing all that much. It's flat, but with a negative bias, down about 0.1% thereabout. But there's a lot of macroeconomic triggers as we speak. So South Korea's revised GDP figures showed its economy grew 0.6% for the fourth quarter of 2023, while Japan's capital city of Tokyo's inflation rebounded from a 22-month low in February. So a slight downtick coming in for KOSPI. And when you look at Nikkei as well, that also fell below the 40,000 mark after crossing that milestone, dropping 0.5%, 0.6% right now. And when you look at ASX 200 also, only one in the group to be in the green right now, up 0.1% thereabout. And on your screen, you also have the Nifty implied. And yesterday, we closed around the 22,405 level. Today, not looking at that good of a start as of now.
Well, when you look at the Nifty spot, 22,494 versus 24,404, so 90-point uptick. So we can expect some stability, but yeah, well, lots of triggers that have happened post-market yesterday, the likes of Tata Motors and IFL Finance. So we'll see how these heavyweights, they weigh on the benchmark today. Hi there, welcome back. You're still logged into Market Cafe and you're watching ET Now. Let's talk about a stock that is going to be in focus today, and that happens to be Zee Entertainment, because that company conducted its analyst call to interact with investors and address concerns, if any, last evening. So what are the key takeaways of this call? My colleague Somit is joining in with all the details. Good morning, Somit.
Well, Zee Entertainment had held a call yesterday at 8 p.m. In the evening, and the main objective behind holding this call was to interact with investors and to address any concerns that they have. Now, while addressing concerns, one of the concerns that was raised was by the investors was how critical is Puneet Goenka to the company, and to its reply, the management said that the board has been debating this question and is yet to form a view. They are putting through a succession plan going forward, and the board has yet to discuss and debate whether a change is necessary in the company at this point of time. When they were asked of how they are planning to safeguard the interest of minority shareholders, they said that the independent directors in the past have taken various steps. They are following that rigorously, and going forward they have constituted an independent investigation committee led by the former judge of Allahabad High Court and independent directors of the company to review the allegations that have been made against the company, their key managerial persons, and also against the promoters. In the other takeaways that were there from this meeting was that the board has also formed a team where they will be doing a performance review with individual team and giving them their profit targets. They will be discussing their difficulties, and they will address various other concerns that are there with the individual teams. Now, this exercise has been done by the company to improve the execution and the business performance of the company. Apart from that, they are also saying that the institutional investors had raised queries only regarding to the improvement of the performance of the company going forward. On the competition, they did say that the competition has been there in the industry, but the competitive advantage of Zee has been to create engaging content and low cost, and this will help the company to improve market share also going forward. They also said that the board is closely monitoring the business execution, and they are confident that there will be an improvement in the business performance of the company from the second half of financial year 2025. And lastly, when the investors had asked the board on whether they are getting many other expression of interest on that, the management said that Zee keeps receiving expression of interest from various financial and strategic parties, but given that it has applied to NCLT for the Sony merger implementation, and there has been no outcome of that so far, and there is no guidance also when the outcome will come. They cannot go ahead with this expression of interest. They'll have to still wait for the NCLT outcome to come in for implementation of the Sony merger. Even only post that they can consider the other expression of interest that they have been receiving from many financial and strategic partners.
Thanks, Amit, for all of those details. But tell you what, let's also listen into what Zee Entertainment Chairman R. Gopalan had to say about performance uptake as well as profitability.
We are fully cognizant that there is room for performance enhancement, and we are putting through a revival plan by Zee And this is already being put into action to accelerate growth and enhance profitability. We believe that we are capable of executing this plan, and we also believe that we will be on a much stronger footing financially in these few quarters. And we are all committed to performance of the revival plan. Board of Directors of the company has also decided to closely monitor the business model and plan presented by the MD CEO of the company, wherein he has provided the roadmap to improve the performance and efficiency of each of the businesses to achieve higher EBITDA. We request patience and support from shareholders for the coming quarters. We are confident that beginning second half FY25, there will be visible improvement in the performance.
Well, that was about Zee Entertainment, but moving on then, RBI has really cracked the whip on IFL Finance. In a setback for the company, RBI has barred IFL Finance from sanctioning or disbursing gold loans. However, RBI has allowed the NBFC to service existing gold loans. Ankur Mishra is here with all of those details. Ankur?
Yes, Reserve Bank of India has put restrictions as far as gold loans are concerned upon IFL Finance. Now, this has been done after an inspection which was carried on company on last year, that is 31st March 2023, and there were certain material supervisory concerns which were there as per Reserve Bank of India's inspection. Now, what are these? There has been deviations in assaying and certifying purity and net weight of the gold 2 times. One at the time of the sanction of the loans and one at the time of default when these golds were presented. Apart from that, there is non-adherence to the standard auction process. There is also far amount of cash which has been dispersed as far as LTV, that is loan to value ratio, is concerned over the last few months. Reserve Bank of India has also said that they have engaged with the management of the company upon these concerns, but there is not much action which has been taken by the company. These are the charges which are leveled by the regulator. Now, what is the way forward for the company? The Reserve Bank of India in its direction says that there will be audit and special audit which will be instituted by Reserve Bank of India, and after the rectification by the company of the special audit findings, and the findings are after that will be done by the Reserve Bank of India's inspection team, and only after that these embargoes which has been leveled against the company, they may be lifted. But all in all, for now, the existing customers need not worry, because there is no direction for the customers of IFL Finance of gold loan portfolio. That will continue as usual, but there is a restriction on disbursal of fresh gold loans for IFL Finance.
Well, thanks, Ankur, for taking us through all of those details. IFL Finance is definitely going to be a stock in focus today, because what's key to note is gold loan lending makes up 1/3 of the company's portfolio. So it's a sizable chunk that has come under RBI scrutiny. But let's see what brokerages are saying on this. And we have a note coming in from Jefferies this morning on IFL Finance. They still maintain the buy rating with a target price of 765 rupees per share for IFL Finance. They consider that RBI has imposed restriction on disbursing gold loans and potential risk to earnings if restrictions are prolonged, is what they say. If gold lending ban stays for 9 months, they estimate an EPS, so earning per share impact, can be over 25 to 30%. So that's something worth noting, and we'll see how IFL Finance performs in today's trading session.
Absolutely. Moving on then, current natural gas price scenario is very comfortable, and that's the word coming in from Oil India Chairman Ranjit Rath. Talking to ET Now, he also talked about the new gas pricing formula as well. Listen into a slice of this conversation.
Nothing of that sort right now. We would focus on the allocated or authorized geographical areas and try to enhance our footprint.
Okay. One question, sir, with regard to the current price scenario when it comes to natural gas. So what the situation at this point of time, and what is your outlook going forward?
See, the current natural gas price situation is pretty comfortable in the sense that we have a very stable regime now. For APM gas, there is a formula. For nominated gas fields, there is a price range. There is a premium that is also available. So that gives us enough boost to pursue the exploration program and enhance our production. In addition to that, there is a thought process of connecting as Union Minister also said in his speech, connecting the Northeast gas grid and the national gas grid, which is also in the place, and new additional pipelines are being created. So that will help us to produce and evacuate more gas.
So last question on windfall gain taxes. In recent revision, government has increased windfall gain taxes on domestic crude production. Do you think that this is the right time that the government should now remove windfall gain taxes?
See, end of the day, it's actually another excise duty to us, and it is a decision of government for economic welfare measures. So I will not have any specific opinion about it.
Well, all right, so let's get a move on and talk about the other big story of yesterday. We did have a lot of announcements that came after the market, and this was one of those. The State Bank of India has filed an extension in the electoral bond case. In the application filed with the Supreme Court, the SBI is seeking time till 30th of June this year in order to furnish information on the said bonds, given the sea of information they need to sort through. Remember, last month the Apex Court struck down electoral bonds as unconstitutional and thus stopping their issuance. SBI's previous deadline to do the same was the 6th of March.
Moving on then to Motown, the board of Tata Motors has approved the demerger of its combined portfolio of businesses into two separate listed companies, one CV focused and the other one PV focused. Now, Tata Group Chairman N. Chandrasekaran shared how the demerger will help the companies capitalize more opportunities. My colleague Srishti Sharma joins in with more details. Srishti?
Well, yes, a big news coming in from Tata Motors, where the board has approved a proposal for demerger of Tata Motors into two separate listed companies. First will be the commercial vehicle business, and the second separate listed entity will be the passenger vehicle business, which will house passenger vehicle, EVs, as well as the JLR division. If we talk about the contribution, then as of FY23, commercial vehicle used to contribute close to 22% in the overall top line, and EBITDA contribution was close to around 17%. Now, what will change is that the commercial vehicle, passenger vehicle and JLR, what we have seen that in the past so many years now, especially since 2021, both of these three businesses actually were operating independently under their respective CEOs. Now, coming to the SOTP valuation, then analysts do give around in the overall share of Tata Motors, which is close to around 990 rupees. The JLR used to contribute around 400 rupees. Commercial vehicle contribution was around 270, and passenger vehicle was at 236 rupees. Now, what is the analyst take on this demerger? They do highlight that this could be a sentimentally positive news. But for the past so many years, they have been looking at these three businesses on the separate front, given the leadership as well as the kind of financials Tata Motors used to report. This will definitely help them define the capital allocation strategy in the times ahead. But from the valuation perspective, they don't believe that anything will change for Tata Motors as of now. A sentimentally positive news flow, more updates to follow. That's the news coming in on Tata Motors.
Well, all right, Tata Motors is going to be yet another stock in focus today, and let's see what brokerages have to say. We have a whole host of brokerage notes coming out this morning for Tata Motors. Let's start with what Investec is saying. They maintained a whole rating, target at 900 rupees. No significant impact on valuation is what they're flagging off. Creates a pure play CV and global PV play, but they don't expect significant re-rating of the CV business. Let's see what Incred has to say. They've maintained a reduced rating, target at 639 rupees per share. Sentiment booster in the short term is what this news is going to be for the company, and post-split valuation may favor the PV business over the others, and they expect PV to get 62% of the total valuation. CV business will have roughly 38% of valuation and believe in CV potential subject to the valuation that they receive after the split. Macquarie View, then, they've maintained an outperform rating, target at 1028. Pure plays to drive better, and value discovery will be driven better. Conglomerate structure was constraining is what they're saying, and the upside pure play structure lends to the investment flexibility as well. They're saying that the PV valuation discount to Maruti could narrow on the back of this news flow. And let's also take a look at what JP Morgan has to say. They've maintained their overweight rating, target at 1000 rupees per share. They believe that the demerger might lead to better value discovery and the CV business multiples could expand. Lastly, let's also talk about what Nomura has to say, and they have maintained their buy rating target at 1057. They believe that the demerger may not lead to a valuation change at all, and businesses will follow respective strategies, and the CV biz can see some more re-rating. So, well, that's the view coming in from the whole host of brokerages on Tata Motors.
Absolutely. So that's about brokerages and what they have to say on Tata Motors. But let's keep it with what the brokerages are saying right now. And Gaurav is joining in with that snapshot. Gaurav?
Yes. So first let's talk about delivery, because now Kotak Securities has upgraded its rating to buy rating and also upgraded the target price to 570 rupees per share. So they believe in the e-commerce segment, delivery has created its dominance across the players. And if you look at the competition also, with its dominant pricing strategy, delivery has continued to maintain its leadership position somewhere. They believe that e-commerce players have also realized that the company is one of its kind, and that is why they are going to value the company at a higher price. And at the same time, if you look at the delivery's business model, they believe that the volume growth will be there for the company, and that is why this will support the earnings, and that is why we are seeing this kind of bullish view coming up from Kotak Securities on delivery. Let's also talk about IT packs, because CLSA has now downgraded some of the companies like TCS. They have downgraded their rating to sell, and for HCL Securities also, HCL Tech also, they have downgraded their rating to sell while maintaining the target price. So they believe that 2024 outlook from the IT companies is actually a little weak, and we could say this is at the best case scenario. And if we look at the guidance also from the global peers and global IT companies, that has been at a little weak side of the window. If you look at the FY25 earnings, they see some more of the downside risk coming up for FY25 earnings. And lastly, they believe that we may see some kind of negative surprise in HCL Tech and Infosys in April 24, and that is why they have maintained this prices, but now has downgraded the rating to sell rating for HCL Tech and TCS. So we will definitely keep an eye on these companies as well.
Alright, Gaurav, thanks so much for taking us through that. Let's talk about yet another stock that's going to be in focus today, and that is BHEL. That stock has anyway been on a tear, running up more than 250% over the past 1 year itself. Investors are betting on long-term opportunities for the company, and a buzz of a major order win is what we're getting a whiff of. So Lisa, tell us more about that.
Right. So yesterday, BHEL, it rose around 12%, and the reason for that is a potential order win from NTPC. Well, the story goes like this: that in December last year, BHEL was the sole bidder, and they submitted price bids to NTPC, and this is for their Singrauli power plant. And yesterday, NTPC approved this investment worth around 17,000 crore. But why did BHEL move? It moved because it was the only bidder for this project. But however, it clarified that they being the only bidder, it does not actually mean, it does not result in an automatic order win, and they clarified that it is with regard to the Singrauli power plant. But it is not just yesterday that BHEL moved. In fact, in the last 1 year, it has seen a move of around 250%, and there are various triggers for this, because the growth is expected to be backed by opportunities coming in from nuclear power, coal gasification, hydrogen, defense, as well as railway. And they also have a strong order intake as well as strong order book of more than 1 lakh crore, which bodes well, and they see visibility going forward, and they have even lined up a capex of around 900 crore for the next 2-3 years. They even announced a JV with Coal India recently to undertake coal gasification to chemical business. And in the last 6 months also, they have seen meaningful upgrades coming in. The FY25, the September, the EPS was around 3.9, but now it stands at around 6.6. But the stock doesn't come cheap, because the valuation is trading at around 89 times versus the long-term 5-year average of around 32 times. And even out of all the analysts tracking, 58% has a sell rating on the stock, and that is because they see margin pressure building up on the competitive intensity, and also the SEB overdues, as well as Genco's balance sheet worsening, as well as the faster renewable adoption, because BHEL is mainly into thermal as well as coal. So yes, that's the story for BHEL. The overall outlook looks good for BHEL.
Absolutely. Thanks, Lisa. That's quite the move for BHEL, and we'll definitely be keeping an eye on that particular counter. But let's move on then to the F&O space. Ansh's joining in with the snapshot of what's happening there.
Right, so let's start with Nifty first. Nifty touched record high level in the previous session, but if you'll see the chart, Nifty seems to be hovering around that upper range of the broadening wedge pattern, which shows a bit of cautious signal. Whereas on option front, we are seeing some put writing happening at 22,400 level, followed by 22,200, which indicates support around this level. Whereas on upside, we are seeing a very active call writing happening at 22,450, indicating that traders are actually expecting Nifty to take resistance around this level. Nifty closed around 22,400, so resistance seems to be very closer to the current price. Let's move on to Nifty Bank. Let's get this chart on the screen. As you can see in the screen, Nifty Bank closed around the February month high only. So this also shows a bit of cautious signal in this index as well. Whereas on option front, we are seeing put writing happening at 47,300, followed by directly 47,000 psychological mark, indicating good support around these two levels. Let's also talk about FIIs. So FIIs in the previous session, they added around 5,800 long contract and they covered around 5,400 short contract. So net to net, we are seeing a net addition of around 11,200 contract in index future, due to which the total FII long position have inched higher from 35 to 38%, showing their positivity into the market.
All right, Ansh, thanks so much for taking us through that. We did speak about a whole host of stocks that will be in focus today, the likes of SBI, Tata Motors, IFL Finance. But Ansh, tell us which other stocks could be potential buzzers in today's trading session. What are you spotting?
Right, so BEML, Midhani, BEL all will be the initial stocks in focus, because Ministry of Defence has actually signed a contract with these companies for indigenous development of advanced fueling and controlling system for engines and heavy duty applications. Apart from this, NTPC will also be in focus, as NTPC Green Energy, the wholly owned subsidiary of the company, has signed a joint venture agreement with Uttar Pradesh Rajya Vidyut Utpadan Nigam Limited. Moving on to Godrej Properties, the company is set to develop township project in Bangalore, for which the estimated booking value for the project is estimated to be around 5,000 crore. NBCC will also be in focus on the back of an order win. The company's wholly owned subsidiary has been awarded of order worth rupees 92 crore from Postgraduate Institute of Medical Education and Research in Chandigarh. Lastly, KIMS will be in focus, as a company is set to enter into a definite agreement for taking land on a 99-year lease and purchase of a building for setting up a new hospital in Thane. The proposed hospital will have a bedded capacity of around 300 beds, and the investment in the project is expected to be around 500 crores. So keep an eye on the stocks.
All right, Ansh, so we'll keep an eye on all of those counters. But with that, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. You don't go anywhere, because the market takes all of the action forward.